Good afternoon, Chris Robinson, Robinson Ag Marketing, with today's post-close grain and livestock comments for Tuesday, December 23rd, 2023. Merry Christmas. A little bit of a pullback after challenging new highs in the beans today. Beans traded as high as 1057 and three quarters. Finished the day up 1051. We managed to squeeze out an 8 cent range in soybeans. I was looking for something closer to maybe 20 or 25 on a short cover and rally. We may have to wait until Friday to see if that comes to fruition. March corn finished today up a half cent. Couldn't get through 450. Stopped at 449. We're still above the 200-day moving average. If you didn't get my letter today, send me an email. I'll send it to you. The way I'll handle this is if you want to get the email, I'll send it to you for a few days. Contact me first. If you want to get it full time, just sign up and subscribe at robinsonagmarketing.com. I do 6 letters a week, plus I do a private client seminar. It's a lot of information. And again, you can go month to month if you want. You can buy the whole year. If you're looking for help specifically with your hedging, give me a call. I can help you select and manage all kind of hedges depending on what your risk is. My background, I spent the better part of 20 years, 21 plus years at the Florida Board of Trade. I was a local independent market maker. I did not handle client business. I was not a broker. I just traded my own money. In 2010, I transitioned to working with farmers and clients, not because I really wanted to, kids. The floor closed, and it was an opportunity to take what I'd learned and sort of head in a new direction. And I was 41 years old, relatively young. So I've been doing this now for the better part of 15, 16 years, and working with farmers and producers. I really enjoy it. There's about a dozen or so people that are in this business to try and earn your business, work with farmers and producers. I'm just one of a dozen. So if you're looking for fresh eyes, if you're looking for a different approach, if you're looking for somebody that's a better fit, I make specific cash out recommendations. I help you pick out hedges depending on what your market risk is, and then I keep track of them for you. So that's soup to nuts. I can help you out. So even if you don't have 100% understanding of how options work or how a hedge can work, I can work with you. So if you're interested, give me a call, 312-638-8868. Moving on to the rest of the daily changes. Again, March corn up a half cent, 447 and a half. Jam beans down 1 3/4 cent at 1051 and a half. March wheat up a penny and a half at 517. Kansas City March up 6 3/4 cent at 528. The wheat has had a nice little bounce here after testing 5-year lows in Chicago. We went down to as low as 498. We're trading 518. That's a good bounce. Certainly not enough. If you go back to the beginning of October, November, we had a 60-cent rally that didn't last very long. And we are basically fighting it out down here at these contract lows, hoping that we can carve out a bottom and move forward. There's not a whole lot of bullish news out there, but we have had a nice bounce in Kansas City hard red wheat. This week we traded as low as 503. We did not take out the contract low going back to October, which is down at 498. That's positive. There's a lot of resistance for March Kansas City wheat at 550. Again, I would expect continued choppy pre-holiday trade as we finish out 2025 and head into 2026. As far as what's the next big risk event is, it's got to be the USDA on the 12th. It's been a while since we've had a real face ripper. In other words, we've had a while since we've had one of those USDA reports that truly surprises everybody and either punishes the bulls or the bear. This may be one because the government shutdown, and also halfway through the year we were kind of surprised when they lowered the yield in corn, but they added 2 million acres. Right? I think the market still had some arguments about that. Why does it matter? Well, we're going to come up with what the carryout is. So if carryout changes, that could change. That could give us a repricing event, right? Repricing events, they're always fun if they're higher, but they're not much fun if they're lower. So keep that in mind. New crop D's corn, we're already looking ahead to 2026. It's not too early. I hope that we don't have a situation like we did last year where we topped out in February, right around Valentine's Day, and then slid lower into July. Very, very unusual historically to have that. We did not get a weather market, a weather bump at all. And then we ran into the buzzsaw with the China versus Trump, where basically China just said, we're going to sit on our hands. You guys can have a nice little vacation. And they've come back a little bit. They still haven't bought everything they said they were going to buy when they were in South Korea. We still got a couple million more metric tons to buy. The real test is going to be, are they going to come back and buy what they used to buy, which was 25% of our crop. We grow 4 billion bushels. They take a billion bushels. That's sort of been the deal that we've had with these guys for decades. And when they don't show up for that 25%, it's reflected in the price. So you've got November new crop beans at 1073. The high of the spike that when we had that rally was 1131. So yeah, we gave back a chunk of the rally. Hopefully we can get one more run above $11. I had a lot of guys shaking me off when I was saying, hey, we should hedge $11 beans or better. That's typically what happens. Well, on a big rally, guys get very, very bullish. As soon as we got the $11 print, nobody wants to do anything until they get a $12 print. It's just human nature. It's not going to change no matter what anybody says or does. D's corn, I'm looking at, can we get above 470, 475? That's a big psychological number. We're right here at 465. We may get a shot. We'll see. It's something I would continue to watch, though. And again, it's all going to come down to what happens on January 12th. So if you've never hedged before, or if you have no hedges on, years ago, you used to have to go out and buy 300 days worth of protection if you wanted new crop protection. Now, these short dated options, there's really no reason other than the fact that you don't want to spend the money, which I can totally understand. Anytime you buy protection or set a hedge, there's a cost associated with it. There's a cost and a price. There's a cost associated with the hedge, but then also there's the price of doing nothing if the market moves sharply in your face and costs you money on your unpriced bushels. So that's why we hedge. And anybody out there that tells you that they can tell you where the lows and the highs are, I would say keep walking. Like I said, I spent 20 plus years on the floor. I listened to more silly stories, and opinions, and on the floor. And then not to mention what I heard when I was sitting at the bar or riding on the train home, having beers with guys. Everybody always has an opinion. They're always ready and willing to risk your money on their opinion. So be careful of that. That's my caveat for taking people's advice. There's always somebody out there that'll tell you what you want to hear, right? It's like a guy, if you weigh 500 pounds and you smoke 2 packs of cigarettes a day, you can probably go to 999 doctors, and that 1,000th doctor will tell you, yeah, you're okay. Keep it up. And that's lots of times what guys do with a broker. They will seek out information that confirms their bias, and then that's the guy they like. I try and keep it neutral. I try and keep it as objective as I possibly can because I know what happens when you're wrong. I've been on the side when it's wrong and you're trying to explain to people that you care about, why you could have done a better job, but you let your opinions get in the way. Moving over to the livestock. Boy, another day where we could not go fill that gap, kids. I don't know what's going on with the fat cattle. There's a gap up there. Everybody knows what it is. Anybody that has a charting service, I don't care how good or bad it is, everybody knows there's a gap in fat cattle that gets filled at 233.42. We stopped there today. We settled at 230. We're still in relatively great shape compared to where we were on November 25th when we were trading sub 205 down at 204.30, right? So what is that $25 worth to you? You might have missed the top of the move by a couple cents, but what is that, $20, $25 worth to you? Is it worth a hedge? We got a friendly cattle on feed. The market kind of shrugged it off. And again, why can't we go fill that gap? I have no idea. It makes me want to scratch my head. What about the gap in March feeders? It gets filled at 345 and change. Again, we were settled today at 339. Why can't we get there? I don't know. Now, Jan feeders did fill the gap, but you don't want to be trading Jan feeders. Basically, you're slicing and dicing yourself with the cash market there. Get out to March or go out. If you're going to have animals all through the rest of the year, start looking at August and Sep out there. There's still some really good prices we're protecting out there. As for the lean hogs, April finished up 40 cents. Kind of a tight trading range, basically a dollar trading range, 89 to 90 and change. The same thing holds true though. We did get a new high for the move. I'm looking at it right now. The highest trade since October 21st. That's got to be that is a 2-month high in the lean hogs. A great rally. We poked our heads above 90 cents now. The contract high for April that you got to keep your eyes on, 94.70. Can we get there? It's only 350, $4 away. Hopefully we can. But I would say the same thing to hog producers as I would say to cattle producers. You've had this giant jump in and a great recovery in revenue. Is $9 worth spending a buck or two to capture some of that revenue? Again, that's a situation everybody out there has to make, but it is a possibility if you want to get something done. Moving on to a couple things I generally don't talk about: soybean meal and soybean oil. They're pretty oversold. They hit some good support on the longer term charts. That may be something you want to look at if you use a lot of soybean meal. Crude oil, it's really right up against some resistance here at this $59 level. If that pokes its head above there, you may get a little bit more pressure to the upside. You got to remember, this week we also had a new 5-year low for crude that gets, that goes by the wayside, right? 5-year lows in prices, that doesn't get much attention from the news people or from politicians. But if we move $3 higher in 4 days, it's up. That's what gets their attention. So big picture, we still have cheap crude oil. Big picture, we still have pretty cheap diesel. Diesel traded as low as 212, 211. That was a 6-month low. That was a good opportunity. If you read my letter, I was screaming at people, not because I knew it was a low or anything like that. You just know when it's a 6-month low and we just dropped from 270, it's something you want to take a look at. Now, right now, spot diesel is trading 219. It traded as low as 214. Again, it just feels like some people looked at the same thing and said, oh, hey, if we happen to use a lot of diesel, we'd like to buy it down here at 6-month lows. There's nothing more than that. Longer term, the trend continues to be lower. Shorter term, we may get a little bit of a bounce here because, again, when people see things are on sale, just like you would, if you're at the grocery store and you buy a lot of bread, and you've got 6 kids to feed, you see bread's on sale. It's normally $3 a loaf. You can get it for $1.50 a loaf. You're going to buy some more bread, take it home, and freeze it. That's what these guys are doing when if you're in an operation where you use thousands of gallons of diesel, and when it's at 6-month lows, you think you're going to step in there and buy some? I think so. Okay, on that note, this is Chris Robinson, 312-638-8868. Have a great rest of the night. Merry Christmas, and we'll be back at it tomorrow. We have a half day tomorrow, a full day Friday. Take care.